What is an order and what are its types? An order is any directive of the client to conduct trading operations. Types of orders are as follows: market order, pending order, stop loss and take profit, OCO, one cancels other, activated order, trailing stop mode. Market order is a client's command to buy or sell a financial instrument at the current market price. Pending order is a client's command to open a trading position at a price different from the current market price. Types of pending order are: sell stop, a sell order at a price lower than the current market price; buy limit, a buy order at a price lower than the current market price; sell limit, a sell order at a price higher than the current market price; buy stop, a buy order at a price higher than the current market price. There are two main types of orders linked to an open position or a pending order: stop loss and take profit. Stop loss is designed to limit possible losses. Take profit is designed to close a position by reaching the targeted profit level. OCO, one cancels other order, is a combination of two pending orders set to open a position at prices different from the current market price. Execution of one of the two orders brings to an automatic removal of the remaining one. Activated order is a pending order that is set when the price reaches the level of activation. Trailing stop mode maintains the mechanism of automatic shift of a linked stop loss order based on the distance set by the trader.